Unless you've been living under a rock, you know that there's this great old debate that has been going on in basically all investment communities everywhere, which is cryptocurrencies versus stocks. Which is the better investment? And so in this video, I just want to throw my hat into the discussion and into the debate to talk about which one I think might be the better investment for most people. And the answer at the end of this video might not be exactly what you expect me to go with. But anyway, let's get right into it. All right. Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. Turn that thing, say it with me now, blue. But anyway, like I said at the beginning of this video, we're going to be breaking down stocks versus cryptocurrency. Which is the better place for you to be putting your money right this minute? Where should we be investing our hard-earned dollars to get the best returns that we can possibly earn in asset classes? Because as we all know, the way that we build wealth is to collect assets over time, is to grow our assets over time. So in order for us to be able to do this, I didn't just want to go over like, oh, this is just my hypothetical thing. No. This is going to be a breakdown thing. We're going to go through 8 different categories of things that we're going to talk about and decide which way and which one is actually the better investment. We're going to talk about ownership. We're going to talk about exchanges. We're going to talk about liquidity, volatility, trading costs, regulation, trading hours, and then diversification. For the ones that I think is the better investment option, I'm gonna give it a green checkbox. For the ones that I don't, it will not get a green checkbox. I'll give it a red checkbox. If I like both of them, I'm gonna give both of them green checkboxes. So that's the plan of how we're going to break this thing down to ensure that we come up with some kind of conclusion. All right, let's get right into it. So the first one that we're going to talk about is ownership. Both of these asset classes, you actually don't own anything physical. Once upon a time, when it came to stocks, you actually got stock certificates in the mail. It was like a piece of paper, but the danger of that was like a lot of people ended up losing those things, or if you had a fire in your house, it ended up burning down and all that good stuff, or that's not good stuff, all those bad negative things. So both of these things nowadays, you don't need to hold anything hard. Stocks are held by your brokerage. So you don't have to hold any of these things in your hand. Both of these things have become digital assets. However, this is where cryptocurrency kind of gets a little bit of an edge, is because cryptocurrency gives you some level of anonymity. How do you say that word? Anonymity? Anonymity? I don't even know how to say that word, but you get the point. Because you can take your cryptocurrencies off of the blockchain and then it becomes truly yours, where you're not dependent on a third party to actually keep control of those items. You actually keep control of those things yourself by getting a digital wallet, by getting a crypto wallet. For this one, they're kind of tied. Like both of them are good. The next one, exchanges. Now we'll start off with the stock market. The stock market has been around for generations upon generations upon generations. It's been around for hundreds of years. So it has that trust and legacy factor built into it. I mean, the New York Stock Exchange was established in 1792. That's a long time. The NASDAQ has been around since 1971. Even the NASDAQ that's still relatively new is still not that new. But then when we start looking at the other side and we start looking at crypto, we have Coinbase that's only been around since 2012. Binance, which is the largest one, has been around since 2017. So it hasn't been around for that long. Then again, cryptocurrency has only been around since 2008. So it's not really that old of a legacy system. There's still a whole lot of trust that it got to establish with every single person. So for this one, it's a hard, easy, like, yeah, this one is definitely stocks. Like, it's very easy because this one we trust into the system because it's been around for such a long time. There's been a lot of things that have been built into the system. There's been a lot of things that have been set in place that actually help us facilitate a lot of the things that we do on a daily basis when we're investing in the stock market. We'll talk a little bit more about that as we continue on, but that's one of the things that I love about this. The next one is liquidity. Now, even for stocks and cryptocurrencies, both of these can be very illiquid or very extremely liquid, depending on what you're investing in these things. Just like if you're investing in a penny stock, your investment is probably not going to be that liquid. If you're investing in really, really small cap companies where people aren't actively trading it all the time, your investment is probably not that liquid. On the other hand, with cryptocurrency, if you're investing in some of these questionable coins, it's the same thing. Your liquidity is not that fluid. However, if we're talking about large cap companies, we're talking about large stocks or large cap cryptocurrencies like Bitcoin or Ethereum or any of those big dogs, liquidity is not really an issue for either one of these. So for this one, I'm going to have to give the go ahead. Actually, again, it's another one of those things where it's both of these ones are good. Like I'm going to say both of them have good liquidity for you to invest your money, get your money out, invest your money, get your money out. The next one is volatility. Now, this is the one that everybody kind of focuses on, especially when we talk about cryptocurrency. Like in the last 5 years, this is the S&P 500. It's gone up 100% in the last 5 years. It's like, that's not a bad return at all. But then the problem is when you compare this to BTC, it's like, oh, what happened was the stock market has doubled once. BTC has doubled 84 times in the same span. However, how they did it is completely different. If you look at the stock market, except for the dip that we had, a couple of dips here and there where the market fell like 20% and then the market fell another like 30% during coronavirus situation. If we look at BTC, it ain't the same story. It ain't exactly smooth sailing when we compare it to BTC. When we look at BTC in the last 5 years, it's been a roller coaster of a ride. I'm telling you, like, first of all, it explodes. It goes all the way up about 2,000%. It's like almost 3,000%. It's like, wow, this is amazing. But then it automatically drops over 83%. So that's a massive drop. And then it goes, and then it starts flying again. And then it flies all the way up another 2,000%. But then, oh my God, they start falling again, another 40%. So the volatility with cryptocurrencies is crazy. You can literally pull up any cryptocurrency and all you will see is just this roller coaster ride, where it's like the highs are super highs and the lows are unbelievably low. If you can stomach the ride, you're going to enjoy yourself. So when you talk about volatility, like, it depends on where you stand. I'm going to say for volatility, I'm going to give it to stocks because stocks is just much safer. And then when we move from there, now let's talk about trading costs. As far as the stock market is concerned, basically those have been basically eliminated for the most part. Shout out to Robinhood for making that possible by making zero commission trading like a thing that we can do nowadays. But when we look at cryptocurrencies, it's not the same way. The gas fees, which is how they say is their transactional fees, those can be extremely expensive. I mean, as a matter of fact, sometimes your gas fees can be more expensive than the transaction that you're trying to complete on the chain. So cryptocurrency, as far as that's concerned, that's still a major red because it's just a negative for cryptocurrencies right now because the cost has not come all the way down. Again, it's a new process. Everything is new with that one, but it doesn't matter because when we're comparing both of these, trading costs are a lot cheaper for stocks. The next one is regulation. Stocks have been around for a long time. I mean, we're talking about since 1792. So it's been heavily regulated. Like so many things have been put into place for all the different things that people can possibly do in the stock market. I mean, an entire agency was designed to regulate the stock market with the SEC. So the stock market regulation is heavy. But on the other hand, cryptocurrencies, they still new. They still trying to figure that whole thing. I mean, we just had like a whole tit for tat that the CEO of Coinbase went back and forth with the SEC commissioner, Gary Gensler, and they're just firing back and forth because regulation is on its way into cryptocurrencies and some of the regulations don't make sense for cryptocurrencies. And so there's just a lot of tit for tat that's going on back and forth because regulation is something that's coming to cryptocurrencies. So for right now, regulation is not a bad thing. I don't know why people always see regulation as such a negative thing. Regulation is not a bad thing. It can be a good thing because it makes adoption that much more easier. So when it comes to regulation right now, cryptocurrency is Wild West. Like anybody can basically do anything and everything that they want to do. Regulation as far as cryptocurrency, which is also like another thing of cryptocurrency, it's designed to not be regulated. That's the whole point of it being decentralized so it doesn't get regulated, which can be an issue. It can be a good thing because it's like, yeah, we're allowing people to make a decision for themselves. But on the other side, we're allowing people to make decisions for themselves. And we know people ain't exactly the nicest, especially when it comes to things like money. They're going to abuse things. And so as far as regulation is concerned, for me right now, cryptocurrency is a hard red. It's a hard red. And then for stocks, of course, it's good right now, even though there's still a lot of things they need to take control of. Next, we have trading hours. This one is a hard win for cryptocurrencies. You can trade cryptocurrency any time of the day, middle of the night, early in the morning, weekend, holidays, every single hour of any single day, you can trade cryptocurrencies. This is one of the beautiful things about cryptocurrencies is it doesn't shut down. It doesn't need any of the legacy infrastructure that we have with the stock market. And then sometimes it feels like maybe we should have some like cutoffs because sometimes you've been looking at the stock market and if we don't have some of these like end of day sessions or circuit breakers or anything like that, the stock market will crash a whole lot harder. You know what I mean? So trading hours for the stock market is Monday through Friday from 9:30 on the East Coast, at least it's 9:30 to 4:30 or to 4 o'clock. And then you have extended hours to about 4:30. You have early extended hours from 9 o'clock to 9:30. So as far as trading hours, cryptocurrency dominates this one. Stock market is not that great. Really, the stock market should be allowed to be open 24/7 at this point in time, in my opinion. And then finally, diversification. The way I want to talk about this is both sides have a lot of different companies in the stock market. I mean, if we look at just the United States, we have over 4,000 companies listed on the stock market here in the United States, and way more than that globally. Cryptocurrencies, they're all, like, I think as far as diversification is concerned, you can be extremely diversified. You can be crazily diversified on both sides. But the way that I want to talk about diversification is how do you access diversification on both platforms? With stocks, it's very easy to access diversification. We can buy index funds, we can buy mutual funds, we can buy ETFs. There are so many vehicles that are available for us to be able to be immediately diversified when we're investing in stocks, at least. With crypto, there is no such thing. If you want to be diversified in crypto, you have to kind of know what you're doing. You're going to have to buy every single coin that you want to be diversified into. There is no easy way for you to be automatically diversified into all cryptocurrencies. And so when it comes to diversification, it's a hard win for stocks. With cryptocurrency, you have to literally go through each one. And the problem is there's so many different cryptocurrencies that you're not going to want to even spend the time researching every single cryptocurrencies. And plus, there's so many poop coin currencies out there that you probably don't want your money to go into at all. So overall, what is the decision when we go down? It looks like every single one was basically won by stocks. And then we had like hard no's in the cryptocurrency space. We had 3 hard no's in cryptocurrencies and 1 hard no in stocks. And then we had some like, it's okay, but it's not exactly the greatest as far as cryptocurrency is concerned. So generally, what is my conclusion? My conclusion is stocks are a much safer asset class that you can use to build wealth over time. However, it doesn't mean that you can't also dabble with cryptocurrencies. Yes, there are a lot of risks that are associated with investing in cryptocurrencies, but it doesn't mean that it's something that we should just ignore and close our eyes to because, oh my God, it's just been so speculative overall. There's a lot of great things going on with cryptocurrencies. I personally, I'm very biased towards Ethereum. I've kept on learning more and more about Ethereum. I kept on learning how they're using it in different strategies and how it's becoming, a lot of things are being built on top of Ethereum. It's not just like, oh yeah, it's just these coins that people speculate about. No, there are businesses, there are companies being built on top of Ethereum. It's just like, think about the internet. Once upon a time, it was just like, oh yeah, internet is cool. But then we started having things being built upon it. Think about the Apple App Store, for example. Once upon a time, it was like, oh yeah, that's cool. I downloaded a flashlight from it, but now we have entire businesses that is designed to make their money strictly on the Apple App Store. It's the same way with Ethereum, at least in my opinion. And there's a few other ones that are also kind of like that. We have Solana, and we have a few other ones that have applications being built on top of it. Don't close your eyes towards something that's happening in front of you just because you feel like it's so speculative. I shan't do it. No. Try to learn. It doesn't mean you have to dive all the way in. Just keep your mind open. Open your mind to the possibilities of what is happening in front of you. So at the end of the day, my answer is do both. Figure out the way you want to go about doing it, and then just invest a few dollars. I'm not saying invest a whole bunch of dollars, but like maybe you have like $20. Maybe figure out, open a BlockFi account, put $20 in some kind of stable coin, and then you start seeing that you're receiving 8.5% return, rather than when you look at the bond market right now that's giving us less than 1% return on our money. But again, there are risks involved. So understand the risk. Spend some time learning about the cryptocurrency space so that you can grow in your knowledge, and don't just close your eyes to it just because, oh, I don't understand it, I'm not even going to look at it. But anyway, I hope y'all learned 1, maybe 2 things out of this entire thing. And if you did, hit that like button. If you enjoyed it, hit the subscribe button. I'm going to catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And your boy is out of here. Peace. Whoosh.